Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good As Gold. So over the last week, we've seen gold prices flip twice, with sellers currently in the driver's seat. Gold's really tuned into unexpected data and global political happenings, and the market's busy adjusting its expectations for when and how much the Fed might cut rates. This directly impacts how traders are playing their gold cards. So as usual, let's zoom in on the last 7 days of gold against US dollar daily chart. Early last week, gold was kind of tidying up, but by Thursday it dipped to 2013, a low from its late December drop. Still, it wrapped up the week on a high note above 2060, breaking free from the downward trend we've seen since January kicked off. Come Monday, gold inched up a bit more, but lost some of its climbing momentum. Just yesterday, we saw a plunge over 26 US dollar per ounce, landing around 2030, basically undoing the gains from the prior 2 trading days and settling back on the downtrend line. If the selling wave keeps on, 2017 might be our next stop for support. That spots not only the low from last week, but it's also where the 38.2% Fibonacci retracement level sits from the upstick we saw from early October to early December last year. And if we need more backup, the end of October high at 2009 and the big round number of 2000 could offer some cushion. On the upside, the high point from last Friday at 2062 could throw up some resistance, but if gold breaks through, eyes might turn to last month's high of 2019. Alright, let's quickly unpack what's been driving gold prices up and down. On the upswing side, it's a mix of the global political development and US economic data not quite hitting the expectations. But the recent dip, that's mostly down to the Fed's Governor Waller's hawkish shift, saying no reason to move as quickly, cut as rapidly as in past, which is a big change from his more dovish stance last year. But global tensions are high as well, like the US-UK airstrikes on Houthi militants and the ongoing conflict between Israel and Palestine, boosting gold's appeal as a safe haven asset. Plus, the 1% year-on-year US December PPI was a bit of letdown, fueling speculations about faster Fed rate cuts. This mix pushed the dollar around and nudged up the gold prices. But then Waller's latest speech threw a curveball, coming off more hawkish than expected, and that's put some downward pressure on gold prices as well. So gold's been on a bit of roller coaster recently, with a lot of factors in play. Well, even with gold's recent downturn, some factors I reckon might shape its longer-term performance or trajectory. Most developed markets are leaning towards rate cuts this year, though the timing is still up in the air. Also, the US government debt just crossed 34 trillion US dollar for the first time, and Fed's operating losses last year hit a record high. So if this high debt, high interest rate scenario sticks around, it might crank up the pressure and lead to rate cuts, potentially boosting the gold. Moreover, this risk itself will also lead people to buy gold as a hedge. Plus, with the elections happening worldwide, bringing more uncertainty, the prospects for gold prices are promising as well. So in a nutshell, gold's been riding the waves of global politics, US economic data, and Fed's attitude towards rate cuts. Looking ahead, factors like potential rate cuts in developed markets, US fiscal challenges, and global elections are likely to keep gold in the spotlight. Keep an eye on tonight or early tomorrow's US retail sales data. A consensus of a 0.4% month-on-month increase is on the table. If there's a dip, it could trigger more dollar selling and give gold a leg up. So that's all for this week. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!